So this is the market summary for Monday, the 13th of February. We did take a lot more trades than we would have liked, and that's primarily due to the auxiliary strategy. So what we'll do now is we'll just have a look at how the market. So when we came to the market here, market already pulled back, found support at the previous day's high, which was Friday. Had a strong move to the upside. With the market trending with higher lows, I should have been looking for long trades, but without the economic calendar showing anything, I thought prices would pull back in. And so first I started, because I took quite a few trades, I'll use a 5 minute to do this summary. First I started to take short trades off the 50% midpoint on the weekly, last week's trading range. Took the first short, as we can see, closed out for break even. Took another short off the test and rejection of the 50% midpoint, expecting move to go down. In hindsight, this does look like a pull flag. I was stopped out for a loss. Prices continue to go to the upside, and then I started to make some FOMO trades here. I was looking to catch a top, and what resulted in I was taking a bunch of shorts after prices pulling back. Expects to move to the downside. Varying degrees of success. Got 0.75 points, 2.7, lost 2.25, and so on. So I was taking quite a few trades here, trying to catch the tops here on ES. One of the trades I did take was on a pullback. I was expecting prices, not sure where it is because the amount of trades I've taken here. But one thing I've noticed is I did trade through lunchtime, which isn't good for me, especially on quicker time frames, as I was using the auxiliary strategy. And what we saw was during this lunchtime period between 5 and I'd probably say 7, as we can see, even though we did have a couple of positive trades overall, just churned during that time, spending quite a bit on commissions. Now this trade here, this very last trade was a short. I was looking for prices to head down towards in around that 31-32 level. This previous level where prices pulled back and held before moving to the upside. When I took the short here, I was looking at price head towards that level. I traded down from my entry at 44 down to 41, expecting to move further. Prices went all the way down to 36 and pulled back and stopped me out for 41. Probably gave it a bit too much room, but that's the reason why I've got the stars here on that trade. And after that period there, I did take a bit of a break away from the charts. When I came back and prices came in towards this area, at the time prices did seem to have buyers in the market, so went long. Prices came back, so I decided to get out for a 3-point loss. And final couple of trades here. I saw prices selling off, and on the F15 here, I went long. So this trade over here, I went long somewhere over here. I went long, and as prices started to come back a bit, I got out of the market. Didn't quite follow my rules. I thought prices would continue to sell off down towards VWAP or the midpoint, so I decided to get out. Didn't follow my stop. Prices came down, broke the low, no stopped me out, came back all the way back up to the upside, and would have hit my target. So I need to trust my system more, but the auxiliary trades and the losing periods that resulted from the auxiliary trades kind of threw me off my main strategy. What was this break-even trade here? I took a break, well, slightly one tick loss, quarter of a point on a trade, and it was primarily due to me not being happy with the entry. And going in towards the close, I think it was off, yes it was, I know what it was. I took a break of the highs of this bullish candle. Price is closed bearish, so I decided to get out of the trade. Even though we have a strong wick to the downside, we've got wicks to our left here. I decided to get out because we did close bearish, and I thought we'd probably go back down to test the lows again. That resulted in a quarter of a point as prices came back up. I actually had a standard main strategy set up. I should change this actually. This was a main strategy setup that we did take, and it actually, let's see what that was. Main. That actually it did. It did hit our target. So initially prices broke through our target. I was looking to how we go towards the highs of the day, but as price decided to come down, trailed up to my first target, and in and around that 44.50, and price came down and took us out of the market there. And after that, prices still looked bullish, so I re-entered long at a worse price. I got in at 45.25, previous bullish trade, long trade. I got out at 44.50, so three quarters of a point worse off, and I was planning to hold that into the close. And when prices were selling off, as you can see by this wick, when the imbalances came out 10 minutes before market close, it did look like a bad decision, but eventually the buyers came back into the market, drove it up, and I closed just before the 9 p.m. candle opened here for an additional 2.75 points. So going into the close, I did pick up a couple of points here, just to recover a little bit here on our day. And let's just have a look at the account. So on the account, as we can see, we did have a bit of a pullback in the account. Previously we were at 44.76. As you can see, primarily due to the amount of commissions. We have had a reduction in our account growth. So we'll just go back through just for today, the 13th, and there we are. So we started the day around that 44.76 and ended at 40.96 here. We show the rest of the account in the weekly summary, so we won't be doing that. And that's pretty much it. Thanks for watching.